Hi, this is James Shug with Westpac London's end of day report for Friday the 30th of November. US fiscal cliff negotiations continue to dominate market sentiment today. There's been no fresh comments out of either the White House or from the Congress leaders, but markets are still hopeful of some favourable developments there, and it's kind of left trading fairly muted. We had a lot of data today as well. I'll run through that. In the US, the core PCE deflator in October was flat. It was up 0.1%. That's steady at a 1.6% annual rate. But personal income growth, well, there wasn't any. It was flat in the month, and personal spending fell 0.2%. Now, the Commerce Department said that 24 states were impacted by the superstorm, which made landfall on October 29, right at the end of the month, but enough impact in the month to be felt in those figures. But they couldn't quantify the exact amount of the impact. They did say that real personal spending fell 0.3% in October. That's the steepest decline in a month that we've seen for 3 years. In the Chicago area and Milwaukee, we saw two PMIs. The Chicago PMI rose from 49.9 to 50.4. That's its first reading above 50, although just above 50 in 3 months. The production and jobs components were higher, but the orders component was quite a bit weaker. Milwaukee was up a couple of points to 45.5, but that's its 5th straight month below 50, indicating contraction. And that's after it averaged 57 in the second quarter of this year, so a sharp slowdown in Milwaukee. Canadian GDP growth slowed from 1.8% annualised to 0.6% annualised in the third quarter. Euroland unemployment rose to 11.7% from 11.6. That's a new all-time high. I mean, we know some of the numbers. We've got unemployment around 25% in countries like Spain and Greece. Youth unemployment approaching 60% now in Greece and above 50 in Spain. A real human cost there. That was October. The November inflation read was 2.2%, down from 2.5%. That's the flash estimate. That's its lowest since the end of 2010. So we've got rising unemployment and falling inflation. And also German retail sales fell 2.8% in October. These are real figures adjusted for inflation, and they exclude cars and petrol. French consumer spending was down 0.2% in October. So in Germany, we've got an annual pace decline of 0.8%. In France, an annual pace decline of 0.5%. That's a weak start to the fourth quarter in those core European economies for consumer spending. And you've got to admire ECB Chief Draghi. He basically said today that Europeans need to stop living in the fairyland of the past. He says now that European growth won't resume until the second half of 2013. Now, I did a bit of number crunching and going through my notes, and I can say that in March 2012 he said recovery would begin in the second quarter of 2012. Then in May he said it was going to begin in the second half of 2012. Now, 6 months later, he's saying it's going to be in the second half of next year, so he's delayed it by another whole year. Now, our view is that we're going to see fourth quarter, the current quarter, contract by about 0.4%. If we assume that, and then take Draghi's scenario of, say, zero growth in the first 2 quarters of next year, and then say 0.2 in the third, 0.4% growth in the fourth quarter of next year, consistent with his second half 2013 recovery view. If you do the maths, that means you get in 2012 a contraction of minus 0.4%, and in next year a further contraction of minus 0.2%. So this is pretty significant, because basically what Draghi's saying is that the ECB staff forecasts, which are going to be revised when he announces them at the press conference next Thursday, he's basically going to be saying that Europe's in a multi-year recession. that's so our view is the staff projection for 2013, which was -0.4 to +1.4 in September, with a midpoint of 0.5% growth, will be revised to -0.9 to +0.5, a slightly narrower range, with a midpoint of -0.2. So a bit of number crunching there, but it's significant because the ECB was way too optimistic this time last year, but they're sounding pretty realistic, it seems now. One bit of good news, UK consumer confidence jumped from -30 to -22 in November. Very sharp rise, don't know why. Neither did the GfK people who actually assessed did the survey. So that was the data flow today. In terms of the markets, we've got the London market up 1/3%. This is about an hour ahead of the close. French market up 0.3, German's up 0.3, Spain's flat, and Italy is up 0.2. And the Dow in the US is pretty much flat at the moment. It's at 13,027. Commodity markets, gold's down 1/4%, $1,725 an ounce. Oil up 1/3% at $88.39 a barrel, and copper is up 2/3%. The Aussie dollar is at 1.0425 at the moment. It's been hovering a bit below the 1.045 mark all day today. Very busy week coming up in Australia next week. In fact, globally, we've got the Reserve Bank meeting, we've got Australian GDP figures, we've got Australian jobs figures, we've got the Bank of Canada, ECB, Bank of England, and US payrolls, just to name a few of next week's events. The German Bundestag approved the Greek bailout today too, just in case you're wondering. Okay, I'll leave it on that note. Back next week.